We expect, like you mentioned earlier, we expect that the inflation figure will drop further in the month of April when the NBS releases the figure this month. Basically on account of base effect, and again the fact that the rate at which the food prices are increasing has been increasing at a decelerated rate in the last few months.
So do you have a figure in mind? Forecast, yeah. For April?
Yes, that's about 12.3.
12.3, okay.
3,
okay.
At the end for April. But even going forward, we expect that it's going to drop lower. And we also think that maybe towards around July this year, August, all things being equal, we'll expect single-digit inflation rate.
But now let me play bad cop. In your report, you spoke about, the rising cost of food importation, and you spoke about the depreciation of Naira in the I&E window. And you also said that the passage of the Nigerian budget, 2018, it's a bit late already, but those are things that could, take our dreams of single-digit inflation away.
So if you look at the major items that Nigerian buy, imported food items, sugar, for instance, is being on the downward trend. In the report, we show that given the figure that was released by FAO, it's at about a 31-month low at the moment. And that's the trend we've seen in the international market. The rate at which it's been growing is at a decelerated rate, like I mentioned earlier. The stability in the foreign exchange market has also reduced the pass-through impact of that. So the pass-through impact is positive on inflation rate, and that's what we see going on, in the near future.
In the last couple of months, also recently, we've talked a lot about the pressure in the middle belt, of the country, the food basket of the country. We've talked about all the crisis with Benue, how farmers, many of them are unable to return to their farms. I'm not sure if there's been a pass-through effect already, but at what point do you think we may begin to feel the pressure? Do you think that it's not been significant enough to pass through the figures?
Okay, so the rise in the prices in prior years, April, May last year, and even right from January, the rate of increase, we observed that is actually higher than the impact of the current situations in the country. We observe some seasonality adjustments in some prices in that report. Like for instance, tomato, as we enter the rainy season, the prices begin to go up. Okay, that's seasonality adjustment. Yes, the problems we have in the middle belt in the country, we just hope that federal government will be able to tackle those issues very fast, because that's where food is being produced in this country. So otherwise, it may likely impact the food prices. But then, looking at the issues we have now, we've not really seen so much of that impact in what we are seeing, and we hope that the issues there will be tackled and farmers will be able to go back to the farm and they'll be able to produce that will not lead to so much shortage. That's why we're saying that all things being equal, that if the issues remain as we are, we do not expect so much of price increases.
So you say, FSDH Merchant Bank says, inflation should drop to about 12.4. Other companies that I've looked at, other reports I've looked at say that inflation could drop to 12.7. So we're seeing a lot of analysts coming out with reports that say inflation could drop. Do you think that this is something that investors in Nigeria's capital markets have already taken into account? Or is it, something that could change the way they've been investing in recent times?
Okay, so the way we have seen what we have observed in the last few months, and the correlation is such that it's more pronounced with fixed income securities. So you've seen the drop in yield on fixed income securities, particularly on the treasury bill, Nigerian treasury bill. So when this number is released, we expect that it may drop further a little bit. However, on the longer end of the curve, the federal government bond, we released a report last year where we said that we expect that there will be an increase in federal government, the yield on federal government bonds, as government begins to borrow money to fund the election, to fund the budget when it is approved, and then the shortfall that we are beginning to see in the economy when they begin to borrow money, and the movement, further they are going to be moving away from the short end of the market and they're moving to the long end of the market in line with the DMO strategy, will place a little bit of a pressure on that level and cause rates, yield, and federal government bonds to increase. And that's so. And again, when the yield on the fixed income market is dropping, it has positive impact on equities market. Again, all other things being equal, because there are a lot of other factors that, inform decisions, buying decisions on the equities market.
Okay, really, one last question. I mean, we're going to get an MPC, another MPC meeting, and so I'm thinking for the central bank, how do you see them responding if we do see inflation numbers coming in as low as you say?
I mean, the last time the MPC met, we released a note expecting monetary policy easing. If we have, just because we are looking at forward guidance of our projection, if this number comes through and then in May it falls further, I mean, there are justifications for Central Bank to his policy to reduce the MPR, which they have kept for a long time at this level, and to encourage credit creation to the reset of the economy.
Okay. Fingers